Hello CA aspirants, welcome back to our channel CA Aspirants Comfort Zone. Today, as per our subscriber, a little cute subscriber's request, we are starting with the chapter number 5 of Audit, that is Audit of Financial Statements. This chapter is mainly read on the point of view of listed company. We have to first check test of control, then test of detail. What are assertions? This chapter is completely, what we have made is completely based on assertions. Before getting into the chapter, we'll see what is assertions. Assertions is specified by management. It is the representation by management, explicit or otherwise, that are embodied in financial statements as used by the auditor to consider potential types of misstatements that may occur. Income statements assertions. The shortcut is to remember as awesome presentation, that is OCM presentation. O stands for occurrence, completeness, cutoff, this is C square, okay. Awesome, that is C square presentation. One C stands for completeness, the other one is cutoff, M stands for measurement, and presentation stands for presentation and disclosure. In completeness, we'll be understanding which is understated or overstated. In cutoff, we'll understand it is correct accounting period, it has been recorded or not. Now let's get into the chapter and know about the items on which we'll be knowing about this. First one is sales. Here we have to check all this. The shortcut we do remember, right? OCM, awesome presentation. O stands for occurrence. We'll be checking occurrence. Okay. Check invoice recorded twice. If it should be recorded only once, right? If it has been recorded twice, we have to check how many times it has been recorded, if it is proper or not. Cancelled invoice is recorded or not. Test check few with journal. Confirmation from customers whether any fictitious customer or sales have been recorded, that means which do not exist but it has been recorded in the books. Whether sale is done without consent on year end. Calculation of ratio of sales return. Journal for unusual transactions. Coming to the next, OCM. O we have done about occurrence. C is completeness, understated or overstated. We'll be checking that. It should be neither understated or overstated. It should be correctly maintained. So we'll be checking this. That is completeness. Perform cutoff to ensure revenues are recorded properly. We remember what is cutoff, right? If it belongs to the same period, same accounting period or others. Just like if in case of prepaid expenses, it will be for next year, right? We should not be recording in this year. We have to follow that. Check sales invoice data. Check credit notes issued after year end. Trace shipping documents with sales journal. Check reconciliation of total sales with stock records. Check GST tax and returns to match with revenue reported in profit and loss account. Multiply total sales with GST rate. Here, if the GST rate comes properly, we can assure that the total sales is also been recorded properly. Then coming to the next assertion, that is measurement. Trace few transactions from inception to completion. Recalculate prices as per contracts and extension on sales invoice if exports comply with AS 11, that is foreign, right? Export means sending it to the other country. Understand client operations and related gap issue, point of sale method or percentage of completion method. Compare rate of sale with related party, about accounting stand. Everything is followed. Presentation and disclosure, that is as per schedule 3 of the Companies Act. Disclosure has been made whether revenue from operation disclosed separately, sale of products, sale of services, other operating revenue. In sale of products, it should be including excise duty. Whether brokerage and discount on sale other than trade discount has been disclosed. Related party transaction disclosed in notes of accounts as per AS 18. We have given our accounts exam, that is why we'll be remembering this AS. I'm not going into detail about those things. Other incomes are like interest income, dividend income, interest on FD, a gain or loss from sale of mutual funds. We'll be seeing that. Interest income not linked to entity's core operations. Income on FD is recognized on time proportion, taking into account the amount outstanding and interest rate. That is cutoff. It is all about cutoff, that on timely basis, on time proportion, will be dividing it. In this year, how much should be recorded? That should be recorded in this year, which belongs to next year should be recorded in next year itself. Dividend is right to receive is established, amount is measured, high probable dividend will flow to entity. Only in this case, a dividend should be recognized. Interest income on FD. List of all FD with number of days outstanding and interest rate. Verify arithmetical accuracy of interest by amount into rate into days. Trace and confirm amount from bank. Obtain TDS statements, because we'll be knowing about interest. That is what? You'll be getting only 70%, right? 30% will be deducted as TDS. So we can know on that basis also if the interest amount has been recorded properly or not. Gain or loss from sale of mutual funds when selling. Difference between redemption price and carrying value of investments. Coming to the next one, we have to vouch, consumption analysis, stock composition analysis, and ratio. In case of purchase, verify internal control, select samples, random sampling. Substantive analytical procedures is must. Compare with last year, trend analysis. Occurrence, whether any fictitious vendor process to ensure existence of vendor. Goods received at factory gate and registered in inward gate register. It has been registered in the gate register. Like whenever the stock is coming into the premise by road, assume this is as gate. Here the watchman or the person who is responsible will be standing. He has to take notes of everything, how many has been come, how many has been not come. That should also be checked in this. Signed by appropriate client personnel. Quality of inception of goods was done. Invoice is approved. Stock record is updated. Completeness and measurement. Cutoff to know recorded in same period. Check last 5 purchases are recorded. Correct accounting of goods in transit. Written representation from management. Analytical procedures like consumption analysis, stock composition. Compare credit turnover ratio between current year and previous year. Quantitative reconciliation. Disclosures for purchases are as per Schedule 3. Purchase of stock and trade separately shown. Changes in inventory, work in progress, and finished goods has been disclosed. Related parties are disclosed. See, in disclosure and presentation, mostly we'll be seeing these points. So these 4 points can be remembered easily. We'll check everything once. We'll remember this point. This will be suitable for any of the items of financial statements. Please take the screenshot in case if you don't remember these points. And this will vouch, agreement of trust deed, computation sheets, financial statements, and disclosure. Employee benefit or payroll expenses. Occurrence, completeness, measurement, all these comes under these points. That is process of computing employee attendance, risk of dummy employee, list of employee, new, left and old, New employee check letter of appointment and salary of first and next month's full and final settlement of reassigned employees. Calculate average salary per month per employee and compare previous year and current year and find variance. Verify provision on bonus, gratuity, leave encashment, etc. In disclosure, we have to disclose as per Schedule 3. We know this, whether employee benefit expenses has been classified as salary and wages, contribution to PPF and others, staff welfare expenses. Coming to depreciation and amortization, understanding method of charging depreciation, obtain asset register from entity as revenue nature items has been capitalized, sample of asset and depreciation rate and amortization charged and amount charged, ensure intangibles are properly amortized, ensure depreciation is charged from date of ready to use and not put to use. This is a basic thing that we'll be studying in A16 also. When borrowing cost will be adding from when it was used, right? Like that, we have to check that point also. Depreciation on revalued item is properly accounted. Depreciation as per income tax has been followed. Analytical procedure to know depreciation called as per its it is calculated as per its life values properly verified. Coming to the next, we have to disclose accounting policies for depreciation and amortization. Useful life of asset depreciation methods should be mentioned, that is straight line basis or WDV, different kinds of depreciation. Other expenses like rent, completeness, occurrence and measurement. Information on month-wise rent in agreement. 12-month rent has been booked as per agreement. Specific consideration is to be paid to escalation clause if any agreement, whether same or recorded. Agreement in name of entity. Power and fuel expenses. Obtain month-wise schedule, 12 months recorded. Multiply month-wise power units consumed with rates to check total bills. Link with bills. Insurance expenses. Summary of policies with validity period. Expense correctly prepaid and correct period based on number of days. Legal and professional fees. Month-wise consultant summary. All months are charged. Non-recurring expenses. Verify sample and vouch attributes of same. In case of legal expenses, also see if provision is made for any dispute for which fees have been paid. Travel, repair and maintenance, other expenses. Monthly summary. Analytical procedure to obtain evidence for other expenses and production analysis. Expenses per unit and compare same with previous years and ask them for the reason for variation. In case of inflation and other things, you will be understanding it if the price has been increased. In case of other reasons, we have to ask and verify with the management. In case if it is true or not, we have to have a questioning mind and we have to approve it. Disclosure, properly accounted or not in the particular accounting period and also in the particular accounts. Coming to balance sheet assertions. In previous sheets we have seen about income statement assertions, right? We do remember this is income statement assertions. The short form is awesome, that is C square presentation. Here for this we'll be taking balance sheet assertions, that is same but the names are little different, where we used OC square M presentation, and that is occurrence. Here the okay, let's take an example of asset. Okay, a machine. Okay, we'll be taking the example of machine. Does machine occur? It takes place. It takes a place, but it doesn't come into a place, right? Here we'll check its existence, if it has been physically found or not. Existence. Then coming to C square, that is same, that is completeness and cutoff. Then measurement. How will we measure? Do we take tapes and measure the asset? Take the machine? No, right? We'll check the valuation, how much price we have been paid, how much the fair market value is, so it is valuation. Then the extra one is rights and obligation. We'll check if the machine belongs to this entity itself or it will belong to other things. So here rights and obligations comes into place. Then the last one is presentation and disclosure. Here also we'll be seeing presentation and disclosure. The changes is just existence and valuation, and also rights and obligation, that is added extra. If we remember that shortcut, this balance sheet assertions will also be so easy. Audit of tangible assets, that is PPE, existence, entities plan for physical verification, evidence of performing verification should be examined, obtain its report with working sheets, all items are tagged, reconciliation of items of PPE, verify discrepancies, notes and a manner in which they are dealt with books and financial statements, completeness in case warehouse has a third party goods or our goods at third party place, verify movement, arithmetical accuracy, tally with balance, quotations were followed while purchases, verify PPE are approved by authorized by personnel, properly capitalized, verify invoice and capitalized amount, verify deletion and its reason. Now we'll see about valuation, that is properly depreciated on PPE, proper method of depreciation on economic benefits, whether management has done impairment assessment as per AS 28. I'm not explaining all the ASs just because we have written the accounts exam in group 1, so that I hope you guys will remember. And also comment what does AS 28 says in the comment box. Let's see how many of you will remember. Rights and obligation. Invoice in name of entity, deed in name of entity, verify entity is legal owner or not, verify all original title deeds for immovable properties held as balance sheet date. In case deed with third party, get his consent or confirmation, verify register of charges, registration of charges. Disclosure, properly classified as land, building, etc. Assets under lease should be separately specified. Coming to intangible assets, we had to, how do we check the existence of intangible asset? Use in production or supply of goods for administrative purpose. If not active in use, deletion should be recorded in books of accounts and entire asset is amortized. Verify movement, tally with balance, arithmetical accuracy, quotations, tenders is followed. Ensure no research cost is capitalized. Cost is capitalized. I didn't realize that you guys were not able to see it. Okay, we are running out of time. Let's finish this chapter very soon. Coming to valuation, it is properly amortized. Verify methods or reflecting economic benefits used by the entity. Management has done an impairment assessment and where needed, proper impairment is done. Rights and obligations. See all invoices or purchase contracts or in name of the entity. We discussed about this. It is in his name only, about his entity only. We don't borrow it from others and we just say that we have spent on this. We have to check the rights also. Disclosure, classified as goodwill, patent, franchisee, trademark, etc. as these are the intangible assets. Example, loan and advance and other current assets. Existence, direct confirmation, agreement. In case of loan, in case we have taken gold loan, bank loan, something loans, what collateral we have been placed, everything will be written on agreement. Without agreement, nothing will be possible. So we will check the agreement. In case if that is not available with the client because of any reasons, we'll directly check with the banks or money lenders, etc. Completeness, obtain list of loans and advances and other current asset and compare them with ledger. Verify agreements. Loan granted only if authorized by AOA and MOA. Inspect the minutes of meeting of BOD to confirm if all loans and advances are approved by BOD. Repayment is a proper, related and purchased at arm's length. Verify statutory returns to see amount recorded in books of accounts with a claim by authority. Valuation. Assess the allowance for doubtful debts. Compare previous year and see method. Obtain aging report. Not currently due, 30 days old, 60 days old, 60 to 180 days old, more than 365 days. Discuss with management about non-included in provisions. Why it is not included, what is the reason, in what basis you have done, we have to inquire that with the management. Assess bad loans and advances and see if provision is made. Check write-offs approved. Check restatement of foreign currencies, loans and advances as per AS 11. Also comment down what does AS 11 stands for in the comment box. Let's see how many of you still remember about accounts, even if you have passed group 1 or you just have written group 1 exams. Disclosure. Classified as security deposit, other loans. Loans are classified as secured, unsecured, doubtful. Trade receivable existence. Control exists. Invoice not recorded or over recorded. Ask for aging report. Check whether realization is done invoice wise or not. Ask reasons for outstanding longer time. Send confirmation to all big accounting on random basis. Review sales account receivable with previous year and reasons for variations. For completeness, for last 5 invoices, see it is recorded on debtors and goods dispatched or not. While checking completeness and cutoff, ensure all the goods prior to year end have been dispatched and test check them. Check terms and customer in case of bill and hold. Review sales written after the period end to see if excess sales was booked to increase profit. Check process of discount and company's policies. Verify deductions, etc. Valuation. Review process followed for bad debt and see method is appropriate for type of business. Obtain aging report. Obtain list of debtors and compare with previous year. Analyze debtors and see why they are not included in provision. Check provision at correct rates. Check if write-off is approved by appropriate authority. Cash and cash equivalents. Existence, completeness and valuation. Surprise check not on year end but any time after year. If more than one cash balance, HO branch ensure no malpractices. Recommended cashier should be present while counting cash. If rough cash book exists, entries from it should be traced to maintain cash ledger. Check bank reconciliation statement and clients' practices of making BRS a significant and important activity is contact banks, financial institution and ask them to confirm amount held in current account, deposit account, a restrictive account like dividend. Check 100% of bank account balances. If not, agree to bank statement online and send audit team to confirm all account in a foreign currency or restated as per AS 11. Coming to inventories, that is completeness. For last 5 invoices, check if included all goods received prior period year end should have been booked. Sample basis, invoice date to date entry in Word. We already discussed about it, right? When coming into the entity, there will be a person who will be maintaining the ledger, if that has been maintained properly or not. Then check TDS, GST, etc. Inventory, rights and ownership. Vouch recorded purchase. Evaluate consigned goods, clients correspondence, collateral agreements, consignment agreement, evidence of ownership. Confirm inventory if by third party. Check share capital, existence, completeness, valuation. Tally the share capital A balance with previous year audited financial statement authorized, issued and paid up. If no changes obtained, written confirmation from management there is no change. In case change, check limits and verify MOA, obtain certified copies of resolution of meeting of BOD. In case fresh issue, see companies required about minimum has been, if the minimum subscription, application payments, confirmation percentage etc. has been compiled as per the law, compliance with SEBI rules, no issue at discount. In case increase in share capital, fee to stamp duty and MCA is paid properly. Shares issued at premium, verify premium received is transferred to securities premium account. It should not be transferred to any other account except securities premium account. It is used only for the purpose allowed. Bonus shares, right of preliminary expenses, commission or expenses paid, buyback, premium on redemption of preference shares. We have seen this in law also, so hope you don't forget that. For what purpose the premium account is used. Next, redemption of capital. Requirements of Companies Act special resolution is required and circulated to all shareholders, allowed as per AOA. There is no default. Examine order of tribunal in confirming and verify copy with ROC. Company has complied with all conditions of tribunal for this act. Check register certificate of regards to the reduction of share capital. Confirmation from the words and reduce has been used. In case of a reduction in capital, the word reduce should be used in the statement. In case if it has been reduced, we have to check that also. In case of disclosure, as per Companies Act, issued and subscribed share capital, number of share and also value, balance at the beginning, changes in share capital during year, balance at the end. When checking reserves and surplus, we have to check the existence, completeness, valuation as trace opening balance with previous year balances, trace the movement as per profit and loss account. Movement should be traced in statement of changes in equity, adjustments related to dividend and tax. Verify resolution passed by BOD about recommendation, dividend declared after balance sheet recognition in next year but disclose in notes to accounts. For borrowings, we have to check the existence, review board meetings for approval of new lending agreements during review. See new loan agreements are duly authorized. See borrowings don't exceed the limit. Obtain confirmation from bank about loan. Agree details of leases and hire purchases. Creditors to underlying loan agreements, contracts. In case of debenture, examine deeds. Obtain written representation that all liabilities have been recorded, represent valid claim by lenders. For completeness, obtain information of short-term and long-term borrowings of openings and closings. Consider evidence of additional debt through examination of minutes of boards of directors, signature contracts, banks, lenders, etc. Trace general ledger, subsequent transactions to see loans taken after fresh loan after balance sheet date. Obtain independent confirmations, ascertain a confirmation contains all detail, send reminders to non-repliers, compare balance with books of accounts, determine account policies and methods of debt appropriation, agree loan balances and loan payable to loan agreement, recompute interest and discount or a premium on redemption. For foreign loan, check closing exchange rate as per AS 11. Coming to the next points, issue at discount. Sweat equity shares issued by company at discount or for consideration other than cash. It should comply with authorized by special resolution. specify number of shares, current market price, total percent of shares held, issue in accordance with SEBI. Vouching of bank overdrafts, minutes book, agreement document, certificate from bank, financial statements, register of charges, recovery of bad debts written off, schedule of bad debts, proof collection, credit managers file, bank statements, receipts. When management refuses to allow auditor to send confirmation, auditor should perform alternative procedure to get evidence, inquire from refusal and evidence as their validity and responsibleness, evaluate the reason for refusal with risk of material misstatement including fraud. If he finds reason unreasonable and not able to get from alternative, then you have to communicate with TCWG, determine auditor's opinion. How do we vouch work in progress? We have to check cost sheets, cost records, cost comparison, allocation of expenses, and general checking. Analytical review procedure in audit of inventories, stock records, instruction and programs, original sheets of verification, confirmation of parties, accounting treatment, accounting disclosure. Matters that are relevant in playing attendance at physical inventory counting or nature of inventory, stage of completion of WIP, risk of material misstatement related to inventory, nature of internal control related to inventory, procedures followed in inventory counting, timing of physical inventory counting, whether entity maintains perpetual inventory system, location where inventory is held, assistance of an auditor's expert is needed. Assets on hire purchase, minutes book and resolution agreement, payment vouchers, general ledger, financial statements. Vouching building, title deeds, building cost records, depreciation, lease deed, accounting treatment, fixed asset record, registration of document if movable, bill or receipt if movable. Payment for acquisition will be made as capital expenditure and included in cost of asset. How do we vouch IT? Provision for IT, general provision as per profit and loss account, provision every year as it is current provision, properly stated in the profit and loss account and liability of business, tax paid properly, deducted from provision for taxation, provision has been created and written off every year, bank statement, statement of total income, PAN card required, tax payment challan. Sale of plots by real estate dealer, minutes book or resolution, correspondence agreement, etc. Receipt voucher and bank statements, general ledger, journal voucher. Vouch sale on a written basis. Sale or return day books, order book or confirmation book, sales registrar, stock register and statements. For rental receipts we have to check statement of receipts, carbon copies, agreements, account of collecting agents, TDS certificates. For rental receipts we have to check statement of rental receipt, carbon copies of rental receipts, agreements, accounts of collecting agent, TDS certificate. For insurance claim, copy of insurance claim, correspondence, counterfoils of receipts, adjustments, certificates or reports, treatments, profit or loss account. Refund of general insurance premium paid. We have to check insurance file, refund advice, receipt, insurance policy, bank statement, financial statements, etc. For royalties received, agreement deed or contract, periodical statement, acknowledgement statement, cash book, nominal account, records of earlier royalty receipts, adjustment entry. Remuneration paid to directors, we have to check minutes book, AOA, register of directors, agreement, Directors Attendance Register, Companies Act 2013, we have to follow to disclose. Or advertisement expense, we have to know the schedule or register where we mention how much we have paid on which medium, etc. Advance contract, bills and statement of account, payment vouchers, general ledger and financial statements. Repair to assets, internal control, AMC agreements, bills and statements of accounts, payment vouchers, bills, registrar, financial ledger or financial statements also we have to check. Foreign travel expenses, we have to check accounts manual, traveling allowance bills and voucher payments, tour reports, standing rules of employment, RBI approval, general ledger. Independently verifying the correctiveness of some items, we have to ad valorem duty at uniform rate can be verified from the amount of duty paid, amount on excise duty paid, direct relationship with amount of profit. Example, commission paid on profit, commission paid to selling agent as percentage of sales. Aging schedule of debtors is to be prepared as undisputed, considered good, disputed, considered doubtful, disputed, but good. We have to make a schedule like this. I'll be posting the notes very soon in Telegram. Please subscribe to the channel and keep supporting, guys. Subscribe to the channel so that you'll be receiving the notes very soon. Outstanding for following period from due date of payment, it is we have to classify as 6 months, 6 months to 1 year, 1 year to 2 year, 2 to 3 years, more than 3 years, and we have to write the total amount here. For capital WIP PPE aging schedule, amount in WIP, the same kind that we have prepared for the debtors, we have to prepare for this also. WIP projects in progress, projects temporarily suspended, that is 1 year. We can write for 6 months also, 6 months to 1 year, 1 year to 2 year, 2 to 3 years, and more than 3 years, and total. In case of any doubts or any queries, please message me on Instagram or Telegram. I'll always be available to help you. Please share, subscribe, and also like the video if you like. Any suggestions, please comment down in the comment box. I'll be coming up with more videos helping you and cheering you up to stay motivated. Thank you.